You've been critical of the Trump administration's economic policies. We haven't heard from you since the budget was passed. Have you seen anything, Larry? Have you heard anything to give you more confidence in the direction of economic policy in America right now?
Look, the economic statistics are running in a pretty good way. That's a reflection of America's great underlying economic strength. Our capacity to manage and innovate in a knowledge economy, the dynamism of the American private sector, and that's a positive thing. I can't honestly say there's very much I like in the approach manifest in tax policy and the budget. It seems to me one of the few things that economists of all kinds agree on is the importance of being countercyclical. So I can't really understand why we would be stepping hard on the accelerator at a moment when we're entering the 9th year of recovery and the economy has an unemployment rate below 4%. So I don't think the overall budget approach is a prudent one. I think the right budget approach is one that tries to lower the deficit in good times so there's room to borrow and spend in bad times. And now we're in good times, so I don't quite understand what the logic would be of a big increase in the government deficit. And I suspect that it will manifest itself over time in interest rates that are higher than they otherwise would be, asset prices that are lower than they otherwise would be, and increased uncertainty and risks, a larger trade deficit, among other things.
Do you share the view that we're heading into a bond bear market if we're not already in one?
I don't presume to be able to predict the bond market. I think people who are confident of a bond bear market, I think have two tendencies to error. One is they forget about what's already baked into markets, and 3+ Fed tightenings this year, for example, are already baked into markets. And so if that happens, that doesn't necessarily operate as a depressing factor. And I think the other thing they neglect is some broad and deep structural forces that are operating to reduce real interest rates, in the parlance of the Fed, to hold down our star. And those include things like inequality, raising the savings rate, more aging of the population, meaning less need for capital to equip new workers or to house new families.
So if someone is sitting at this moment listening to you, I have to imagine that he or she is thinking one thing. Larry Summers is predicting the jamming on the accelerator, as you describe it, and running greater and greater deficits to produce faster growth now is going to result, as you said, in higher interest rates, whether they be Fed interest rates or market interest rates, and lower asset prices. The question is when. How long does it take for this to happen?
I think that's the question that's always impossible in any setting to estimate. Geologists can point to growing tensions in a fault, but they can't say when the earthquake is going to be. Structural engineers can point to bridges where there's fatigue, but they can't really say how long the bridge will collapse. Your cardiologist can tell you that there's a problem in your heart, but can't tell you when the heart attack will come. I don't have a sense of imminent emergency, but I also don't have a sense that this has many, many years to run.
So we learned a lesson back in January about underpriced risk when it came to volatility. Without pinning you down to a forecast, because it's clear that you're unwilling to be pinned down, and I don't blame you, is risk underpriced? The risk of a calamitous decline in asset prices.
I see more people who seem to me too serene than I encounter people who seem to me excessively alarmed. And to that extent, this does not seem to me to be an especially propitious time for investors.
How difficult a situation does this create for the Fed chairman?
I think there's a difficult balance between the legitimate desire to stimulate the economy and to get as much employment and growth as possible, and certainly to assure that inflation gets back to 2%, and maybe even that the average inflation rate over reasonable horizons gets back to 2%. At the same time, I think you have to worry about the financial foundation for recovery if you're the Fed chair. So I think there's a balance to be struck. And
is he in a damned if he does and damned if he doesn't situation?
I think that's probably portraying things more negatively than I would. But I certainly think it's a very difficult balancing act. And I think Jay Powell's a person with now, after 6 years at the Fed, a lot of experience in these judgments. And he's a very, very experienced public servant and a real professional.
Larry, one of the things that Republicans and Democrats do seem to be able to agree on is the need for infrastructure spending, and yet we still have none. How do we resolve this intractable
debate? There's a Republican view that would emphasize regulatory streamlining and would emphasize finding a somewhat greater role for the private sector. And there's a Democratic view that would be nervous about those things and would put a lot of emphasis on more resources through federal programs. And I think this is an area, like many, where we need to move from either-or policies to both-and policies. I think Democrats are right about the need for more resources, but I think there's some truths on the Republican side in terms of the importance of regulatory streamlining and expanding the role of the private sector.
Warren Buffett is fond of saying, Larry, that he would never bet against America, something of that to that effect. The Trump administration is talking about slapping tariffs of 20+% on steel imports, something in the order of 10% on aluminum imports. Many of those come from China. It appears to be rhetoric and potentially a policy target at the Chinese more than anyone else. If you had to bet, who's going to win, the Chinese or the Americans?
I think the whole question misses what's the single most important point about trade with respect, Eric, which is that it's a win-win game, and that it's not about our doing well so they can do badly. It's about our both doing well. So I can't answer a question in terms of who will win, nor would I want to. What I can be pretty sure of is that because there are far more Americans who work using steel and aluminum than who work producing steel and aluminum, that an effort that is successful in protecting the American market and raising the prices of aluminum and steel is more likely to be a net job stealer than a net job creator.
And where does that take the country in terms of economic leadership, if in fact the United States moves in that direction? I mean, there are mixed signals coming to the administration, as you know. On the one hand, they want to put tariffs in place, and on the other hand, the Treasury Secretary says that the president is open to starting talks again on entering TPP.
Look, I think the United States has had a remarkably good 80-year period, 75-year period since the end of the Second World War. And I think our commitment to building a truly global economic system, and after the Berlin Wall fell, including Russia and Central Europe in it, seeking to work to enable emerging markets to emerge, I think all that's been a crucial part of it. And so I worry about any philosophical move away from American leadership of a global economic system, I think the evidence is overwhelming that countries that trade with each other talk to each other, and countries that talk to each other are less likely to shoot each other. And I think that's as important as any other a case for open trade.
It's easy to be critical of the Trump administration, particularly when you're historically aligned and currently aligned with a party that isn't in power. Is there anything that you see, Larry, that you approve of, that you like, that is worth making note of?
I think the Trump administration has tapped into some deep strands in American thought that have elements of legitimacy, that there are people, large number of people, who feel that we have a government that works for the top 1% and works to help those who are poor and not working, and that isn't there as much as it could be for hardworking Americans whose income is at neither extreme. And I think that group feeling more represented is something I think is very important to our society. I think that the orientation in policy towards recognizing that in a very changed world with an increasingly restive population, with emerging markets having emerged, that the United States can't carry quite as large a share of global burdens as it has before, and carrying that message to other countries, I think that's welcome too. I may not like the way in which the message has been stated. I may detect elements of hypocrisy in the approach that's being taken, but I think that it's a legitimate impulse that's being spoken up for.